Hello, this is Dale Pinker with ForexStopHunters.com with our daily Forex Stop Hunter review. I'd like to welcome everyone hearing my voice watching this video. For your desire and persistence to achieve in a very difficult environment, trading FX, a 24-hour, 6-day-a-week venture. I want to remind everyone that only risk capital should be used when trading high-risk derivative markets like FX, futures, options, and that means money that you can afford to lose, and past performance is not indicative of future results. If you've been following me for some time, you know that I've been looking for a turn in the dollar. I was pointing towards the potential of February 2nd being a GAN day as an important turning point for the dollar. I was favoring long dollar positions going into this date and talked about the US dollar Swiss putting in potentially a significant low. Early this morning we tried to retest this low. There was momentum divergence, as you can see, moving out to a longer time frame. Definitely you could see what happened here is that they went for stops and we did not take out the RSI low, had a huge 4-hour move to the upside, and now when we go to the daily you could see that we have a higher low in place. And in my view, this is a very positive development in USD Swiss. So while the dollar was making new lows, US dollar Swiss failed to take out its lows, which was a precursor of dollar strength in my view. So this type of action tells me that there's the possibility that the dollar weakness phase is over. We're also on the verge of a reversal week, potentially even a reversal month. So we've gotten some pretty good macro signals here. Here's your daily, and I'd be buying weakness in this market. You could protect yourself with stops under this low. They've taken out so many stops off this initial rally. I don't think that there are many longs left, although the most stubborn longs would still have their stops in here. To me, I'm going to give this the benefit of the doubt that we're putting in a higher low and that a major advance could be about to ensue. This strength in the risk aversion pairs was confirmed by what happened in yen as well. We made a new low for the move, although much higher as we go to longer time frames. The yen is, if you look at the daily chart, putting in its second higher low. Unlike the Swiss and the Canadian, which are the risk aversion pairs. It's my contention that this low could be significant, that we could begin another advance that could start taking us back up towards major resistance. And as I've talked about before, I have longer term macro targets that could take US dollar yen back up towards the 88 level or the flash crash low of 87.90. So the potential is that we're just beginning here, and we had our first initial rally from the October lows was 430 pips, and we've been correcting ever since, and that we could be setting up for wave 3 or C, which is the money wave, this being wave 1 or A with an A, B, C for 2 or B, with C or 3 to follow. Also, we did get some pretty good positive divergence here in USD CAD. It was my contention that the lows were going to hold. The lows that were put in did hold. We're not quite higher on the day, but here again I think that we're putting in some type of significant bottom, and that we can begin a major advance here that initially could take us up to resistance and 102.5 down the road. So we've had the first heartbeat of risk aversion setting in, and these pairs led by Swiss having all positive performances. Relative strength leader to the upside Swiss, followed by Japanese yen daily, followed by USD CAD daily. Some type of pin bar is developing here. So the risk trades, of course, came off, and anyone could say, well, it's just a correction. But if I look at the daily chart, we've rallied back a little bit more than 61.8 off this decline, and it's my belief that it's very possible that significant highs are being put in place here in Euro USD. Cable is acting a little bit more resilient, but even cable is putting in a higher low, a lower high from previous action, as you could see there. But for the week, still very strong, more strength than euro. So euro would be the preferred short, although the weak sister, if you look at this, is Aussie USD, which besides having a down day and now trading back under 106.70, which was the previous high, unlike euro USD and cable USD, is also putting in some type of higher on the week, but a negative day and a potential failing rally in Aussie as well. So the bottom line is I believe that we may be putting in a low in the Dixie, and that if that's true, this is just beginning. If you have not caught the first day off this low, and I'm right, there's a long way to go. So I wish everyone good hunting. This is Dale Pinkert with ForexStopHunters.com signing off.